As someone who's worked on integrating Elliott wave theory and Fibonacci into my personal trading, I can tell you that it's extremely useful to understand, but not the only tool to rely on. And despite their shortfalls, I believe you should work on integrating Elliott wave theory and Fibonacci into your trading because they'll help you to avoid making bad structural decisions, they'll help you to target zones more effectively, and they'll also help you to predict market paths. All right, now let's jump in, but before we do, please don't forget to like and subscribe. And I also want to let you know that at the end of the video, I'll be counting one possible path forward on the NASDAQ. Now, I did this count in September of 2023, so by the time I release the video, we should know whether or not that count was accurate, but in the meantime, it should be fun. But before we get into the NASDAQ, let me just briefly explain what Elliott wave theory and Fibonacci trading is. Basically, they're theories that aim to predict future market movement based on a repeatable set of rules, which I'll be explaining right now. Rule number 1, wave 2 cannot retrace 100% of wave 1. Rule number 2 is that wave 4 cannot dip below the high of wave 1 unless it's in a leading or ending diagonal. Rule number 3 is that wave 3 cannot be the shortest motive wave of the impulse. And rule number 4 is that wave 1, 3, and 5 are all 5-wave structures. Now, before I explain further, make sure to check the link in the description below for my $12 27-page Elliott wave and Fibonacci trading ebook. In this ebook, I've broken down Elliott wave theory into different patterns and wave degrees and explained each through the lens of Fibonacci relationships. There's a lot in here, but I specifically focused on describing all the Fibonacci guidelines for different market patterns so that you can target price action more effectively. I've also delved into important lessons learned that I've discovered when using Elliott wave in my trading, special rules that are often overlooked, and explained unappreciated details about complex corrective structures and much more. All right, guys, here we are in a big picture view of the NASDAQ. And I know I said I would start from the COVID lows, but I just want to point out really quickly that I'm counting this larger structure as a 1, 2, 3, 4, 5, and I think that's going to be relevant here shortly. Starting with the blow-off move from March 2020 to November 2021, the first thing I'd like to point out is that our impulse move in blue, which is this 1, 2, 3, 4, 5, is broken down into smaller sub-degrees of impulses itself. So as you can see here, this wave 1 has a 1, 2, 3, 4, 5 structure within it. And then the same with the wave 3 and the same with the wave 5. And even within those waves, there's also smaller fractal waves, which I'll get to in a second. Basically, the idea here and the whole idea with Elliott wave is that the market moves in a fractile nature, meaning that there's impulses and corrections within larger degree moves all the way down to small time frames like the 15-minute and the 5-minute. To illustrate this point, let's dig a bit further into this May 2021 to September 2021 impulse, which is the completion of this larger degree wave 3 in its wave 5. And as you can see, this larger degree wave 3 has its wave 4 completing right here. And from there, it has a smaller degrees impulse within the wave 5. So the impulse can be counted as 1, 2, 3, 4, 5. And even within that larger impulse, you can see that the wave 3 within that is also countable as a 1, 2, 3, 4, 5, and so on and so on. However, I would like to point out that the smaller the time frame gets, the harder it is to rely on the Elliott wave count. For example, this smaller degree wave 3 is a little bit less clear in its impulsive structure than this larger degree wave here, which is obviously a 1, 2, 3, 4, 5. Regardless, this certainly could be counted as a 5-wave impulse if we zoom down a little further. All right, so backing back out, I'm going to count the corrective move down from November 2021 to October 2022 here. Now, the difficulty with this move down here is that it could be counted in a myriad of ways. And that's what makes Elliott wave great, is that it gives you alternative counts that are valid, which could potentially result in different market outcomes. However, given this structure, I do prefer one specific count, which I'll be explaining soon. But getting the green count out of the way here, this 1, 2, 3, 4, 5, I want to just point out that I'm not a big fan of this because it's, number one, implying that we have a wave 1 move down, which means that we'd be getting a wave 2 up and then a crash wave 3 and then just basically a continuation down for a long time. And the reason I don't like that is because, number one, I don't think that agrees with the way the government is likely to respond in a stock market crash scenario, and therefore overlaps the wave 1. So it has to be counted as a diagonal if we want to say this is a impulse down. However, this structure here clearly doesn't take the shape of a diagonal, which, as I've drawn here, is usually contracting And then at the end, it has a strong breakdown. But in this case, it was not contracting, it was actually expanding, and it had kind of a weak sort of peter-pattering move before a strong breakout. This could, of course, be an expanded flat, as I've explained in my ebook, but I don't think that really agrees with the rest of the structure after the diagonal. Therefore, I think we can take that green count away, and instead I'm going to explain what I think is actually going on here. So as I mentioned before, I promised I would describe what a complex correction is, and that's what I think this whole move down is. So from the top, I think we have an A, a B, and a C move, and then another A, a B, and a C move to complete our larger degree A wave in October 2022. Now, as you can see, this move couldn't be completed without this connector wave, which is simply just a straight up impulse, and that's pretty common for connector waves. So the deal is we have basically a double correction, an ABC and a connector, and then another ABC move down. And that all completed in October 2022, giving us a larger degree A wave after the WXY move completed. All right, now that we can probably agree that this is a larger degree A wave down, we know that we'll need at least a B and a C wave to complete this larger multi-year corrective structure. But ignoring all the data to the left of October 2022, could we look at just this structure here and say that this is most likely a B wave? In other words, how can we be confident that we're not in a new bull market? Well, for me, answering that question really comes down to the structure off the October 2022 low. However, after analyzing the move off the bottom here, it's pretty obvious that this was extremely choppy and actually just corrective in nature. So again, we actually had another complex correction here for another smaller degree A wave, and then a B wave that finished in January 2023. And ever since that B wave bottomed, we've been in a super crazy short squeeze type of impulse for wave C. But despite the fact that this is a really strong impulse, it doesn't change the fact that this structure here is a corrective structure. And honestly, C waves are always impulsive, so that doesn't make this any different than what we would normally expect. So with all this being the case, we can say with decent confidence that this was an A wave down and we're in currently a B wave up. And that would obviously mean that we're going to need a larger degree C wave down. So drilling back into the current market structure, I want to point out a couple target zones that I have for this wave 5 of C of B. Just so you know, I explain all of these targeting rules in my ebook, but I want to show you guys a couple examples for how to target a wave 5. The first example would be to take the extension of the wave 4 and to find the pocket of the 123.6 to the 132.8. And we can see that right here could be a possible area for wave 5 to finish. Alternatively, we could extend the wave 1's length off the bottom of wave 4 and get the 1.0 extension of that wave 1. And we can see that right here is roughly the 1.0 extension of that area. However, there is an alternative possibility if this B wave becomes an expanded flat, meaning that it breaks the high of the A wave. And that is that the B wave could end in the 123.6 to 138.2 retracement of the A wave. And that would give a final target of 19,000 on the NASDAQ, which would be insane, but it's not outside of the realm of possibility. Next question becomes, what are some target zones for the C wave that we'd be expecting to occur after this larger B wave? Well, the first alternative would be to target a retracement zone off of the low from basically the year 2000 all the way up to where we are now, and to find the 61.8 to the 78.6 pocket for a possible wave 2, I guess. And that would put us in a NASDAQ price of around 7,000 or possibly even a little bit lower. Now, whether the Federal Reserve and the fiscal authorities that be will allow us to get this low is an open question, but I'm sure that based on recent history, they might not allow us to get this low. So alternatively, we could take an extension from the top in November to the bottom in October of 2022, and then take it all the way to where we expect the B wave to finish, and get a 1.0 extension of that move. And basically from that measurement, we can see that the NASDAQ could bottom around 10,000 around the 1.0 extension. Now, of course, we'd need more price data to project this more accurately, and obviously we need to get confirmation that the NASDAQ would top in the first place. But it's useful to theorize where we think the market could go in the next couple years. And obviously for my future self, it's just going to be interesting to see if these measurements hold any water. In summary, Elliott wave and Fibonacci theory are extremely powerful tools for helping to predict and trade market structures. If you want to learn more about this topic, definitely don't forget to check down below for access to my Elliott wave ebook, which I mentioned earlier. All right, everybody, thanks a lot for sticking with me. I hope this one helped, and I'll see you on the next one.